Hello, hello, and good evening. My name is Brandon Black, and thanks for joining us tonight. I am a Georgia State University graduate, undergrad in finance 2015. I am a part of the MS Finance 2016 cohort. That's the Master of Science in Finance. And I currently work for Vanco Payment Solutions as a finance professional. And this is my third and final year on the Young Alumni Council. Thanks for joining us for Best of the Blue this evening. Best of the Blue is a series of presentations where we get, as a Young Alumni Council, we get an opportunity to highlight the best of young Georgia State alumni and all they have to offer and share with us as a network. The Young Alumni Council is a collective of Georgia State alumni that are under the age of 40. Our purpose in gathering as a council is to increase engagement amongst other Georgia State graduates who have recently graduated and are also under the age of 40. But we also welcome other people to attend our events and presentations. You are as young as you feel. During tonight's presentation, there will be information regarding a giveaway. Our guest, Darren Weber, is joining us, and he will be giving away a cooler and a Bluetooth speaker. Darren is a Georgia State University graduate of 2018. He got a BS in psychology. Darren is a dad. He enjoys working out, and he is Jamaican, and he's an expert at making curry chicken. He is also a licensed insurance professional with Liberty Mutual. And tonight he's going to give us some tips and tricks on how to save money through insurance. And so here's Darren. Take us away with an amazing presentation.
Hey everyone. So Brandon, that was a beautiful introduction, man. I mean, the curry chicken part had me rolling. So yes, my name is Darren. I'm an agent with Liberty Mutual Insurance, and I'm here to talk to y'all about some insurance tips and tricks. So I look forward to sharing some really useful information with y'all. Let me go ahead and share my screen. 1 second here. 1 second here. Alrighty, let's see, share. So can y'all see my screen? Can you see my screen, Brandon? Hello? Okay, there we go. All right, so if you can see, okay, perfect, I see it. Okay, good deal. Alrighty, so let's go to full screen. All right, so insurance tips and tricks. As I said before, my name is Darren Weber. I'm a licensed insurance broker. Now, Liberty Mutual Insurance, we partner with several insurance companies. So that's why I'm a broker. I have access to over a dozen insurance companies in the state of Georgia. So I help clients find the best rates for auto, home, and life insurance in Georgia. All right, next screen. So types of insurance policies we offer. You have auto insurance, home insurance, life insurance, renters insurance, pet insurance, and umbrella insurance. I'm pretty sure everyone knows what car insurance is. Home insurance, pretty self-explanatory to, insurance in your home. Life insurance, that's when you want to protect your family. Renters insurance, similar to home insurance policy, but you're renting, but they work the same way. Pet insurance, if you're a pet lover, my dog is actually at my feet right now looking at me because he wants to go on a walk, but he's gonna have to wait. But if you're a pet lover like me, you can get pet insurance too. And then umbrella insurance. Now, umbrella insurance, that's something for someone who has a lot of assets. And I can touch on that later on. So let's get right into it. All right, so auto insurance. We're going to start with auto insurance. And by the way, I'm going to focus primarily on auto, home, and on life insurance. If you have any questions about the other policies earlier, like the pet and umbrella, I definitely encourage y'all to ask me more. I'm going to basically focus on the most common: auto, home, and life insurance. All right. All right, so 5 things that affect your car insurance rates. We all know driving record is one of them. Just because you have a speeding ticket or one accident in your record, that doesn't mean that you're gonna pay a high premium or have to pay a high premium for car insurance. A lot of times is when you're shopping for insurance, you want to make sure that you go with a company that offers accident forgiveness because nobody's perfect. Certain accidents are completely out your control. I'm not perfect. I've been in an accident before. So accident forgiveness is definitely important so that if you get into an accident, you're not, your rate is not affected. Your rate is not affected by that. Um, Insurance score. So insurance score is something that insurance companies use on the back end to determine your rates. Things that affect your insurance score, credit score is one of them. Now, it's very important I stress that we don't require your credit. Insurance agents and brokers, we don't need your credit, or we don't need your social to do a quote, and we don't need your social to do a policy. Insurance companies, they're able to determine your insurance score based on your name and address alone, and it doesn't affect your credit when you get a quote for insurance. What happens is they're just looking at have you someone who you know how credit affects everything in life. But another things that insurance companies look at is going to be, are you someone who were late on your payments? Which if you're late on your payments, that's not a big deal. But let's say you allow it to go, you let it go to delinquent. You let it go to collections. That's something that's going to affect you in the long run with insurance companies. If you have a balance, if you owe the insurance company money, and you know you owe them money, if it's something like $20, you don't want your policy to go to be flagged for collections over $20. I've seen it happen before. Again, when you have an agent or a broker that's dedicated and works for you, we're able to know these things. So if I have a client that maybe they missed a payment, I'm gonna know that I'm gonna do whatever I can to delay that payment for them if they need help, because it's obviously during these times, a lot of insurance companies now are actually much more lenient. So these days, you really don't have to be stressed out about missing a payment or having a payment delayed. But if you're someone that in the past has allowed your policy to go into collections, then that will affect you in the long run. Um, so that's your insurance score. Insurance companies calculate that on the back end. The underwriters. So how often you drive is one of them too. So again, we're in a time where we're in the house a lot. I don't. I used to go out, enjoy myself. I haven't been out since last year. I haven't been to a party or anything since last year. And I mean, it's been rough, but I'm a new dad. I'm thinking about my family, so I really haven't been driving much. Luckily and fortunately, I'm able to do my work from home primarily. So I'm not driving as much. So if you're someone like me, you're working from home, you're not driving a lot like you were in 2019. That's a great time to look at your policy or contact your agent, broker, insurance company to see if you can get a better rate on your policy because you're driving less. The type of car you drive. All right, so obviously, the more expensive it is to repair the car, the more the more it's gonna cost you for insurance. So if you're someone who likes a luxury car, nothing wrong with that. But just be prepared. I always recommend if you're shopping for cars and you're shopping for different types of cars, one of the things you want to do is see how it's going to affect your insurance premium, because you may be comparing, a 2020 Honda Accord to maybe a 2018 BMW. And even though that Honda Accord is newer, the cost to repair that BMW, depending on the type of BMW, may be more. So I always recommend if you're shopping for a car, you also want to just get some quotes on your insurance to see if it's going to be feasible for you. For that expense, the new car and the new insurance. Adding drivers to your policy. So this can help you or hurt you. Times when it can help you is if you have, let's say you have a few incidents in your record. In a perfect example, you have a few incidents in your record and you get married, right? Your spouse has a better driving record than you do. You add them to the policy, that can help your rate. Now, vice versa, you have a great driving record, and your spouse doesn't have the best record. It can affect you negatively, but then again, There are ways to offset that. That's where agent broker comes into play. You know, we know how to offset different premium increases. Another common thing that affects your policy increases your rate is if you are, if you add a younger driver to your policy, like a teenage driver, that tends to increase your policy. Again, we can offset that. You have the good student discount. You have the student away discount. I'm gonna touch on more auto insurance discounts later on. But there's ways to offset your premium if a premium increase if that happens to you. All right. Does your insurance reflect your lifestyle? So what this means is, everyone's different. I know y'all seen the limited mutual customers. You only pay for what you need. Or basically, we definitely promote customized insurance a lot because you don't want to be paying for something you really don't need. So first of all, do you drive an older car? This is a great time to think about liability only coverage. Now, I'm not saying jump straight to liability only coverage if you have an older car. What I'm saying is it's a great time to compare the cost of full coverage and liability only, because it may not be worth you paying full coverage on an older car if you're not going to get much for it, when it's totaled out. And obviously when you go to liability only, you save money that way. So yeah. Do you own assets? So when I say assets, think about being a homeowner. You have different coverage limits. When you can purchase different coverage limits when it comes to car insurance. You have the state minimum limits, and then you have 3 levels above state minimum limits. Now, if you are, let's say, a young college, let's say you just graduated college, you have one car, you're renting. You may not need the highest coverage possible, because what happens is if you're involved in an accident and let's say you're involved in a multi-vehicle accident, if someone tried to sue you, they may not get much from you. So, maybe having the highest coverage is not, if you're trying to save money, you may not need, 250,000 or 500,000 in coverage. I don't usually recommend state minimum. State minimum is 25,000 body injury coverage and 50,000 property damage total. I mean, if you can afford to go one level above state minimum, I always recommend that. Because the thing is, a lot of times people don't think about what if you are involved in a multi-vehicle accident. You think 25,000 is a lot of money, but you hit multiple vehicles or you injure multiple people. That's those medical bills and property damage things, they add up. So most experienced agents are going to recommend at least one level above state minimum if it's feasible. If it's not feasible, state minimum, at least you have insurance, right? I mean, at least you have insurance. At least you're not driving without insurance. Usage-based discounts. This is for someone who feels comfortable being rewarded based on their driving habits. So let's say you're someone who you don't have a lot of accidents, you don't have a lot of speeding tickets. Let's say your driving record is clean. You've been driving for a lot of years and you don't have anything in your record. And you know how you drive. You can tell, better than anyone else how you drive. If you feel like you can benefit from your driving habits, I highly recommend usage-based discount. This is actually one of the most, let me highlight. Oh, I can't even highlight right now. But this is one of the most, oh, sorry. Let me go back. Whoops. Where we at? There we go. Yep. So usage-based discount, believe it or not, is actually one of the most significant auto insurance discounts out there. For example, Liberty Mutual, we offer up to 30% discount on your policy based on your driving habit. And when you think about 30%, that's a good amount of money that you're going to save on your car insurance policy. So if you're a great driver, you're confident in your driving, and you're comfortable with it, I always recommend it, especially when most usage-based discounts, you're not doing it forever. You're doing it for a short period of time. For example, Liberty Mutual, 90 days. You do it for 90 days only. After the 90 days, you return to this. You return. Well, actually, it's on your phone. It's an app on your phone. So after the 90 days, you can delete the app, do whatever you want to do. But at least you got rewarded based on those 90 days of good driving. Gap insurance. Going back to I mean, this could apply to any car, really. So let's say you bought a brand new car. You want to make sure that you have gap insurance, and I'll talk about it on the next slide. How does gap insurance work? So let's say you purchased a brand new car, and you currently have a remaining loan balance of 15,000. You owe 15,000 left in your brand new car. I mean, you purchased that car, a while ago, and it's 15,000 left. Cars depreciate quickly. So that car that you owe 15,000 on is now actually only worth 10,000. So if your car gets totaled at its current value, that means that I mean, there's going to be a $5,000 difference between what you owe in the car and what it's worth. So in order to avoid paying that $5,000, paying money on a car that's total, gap insurance is going to cover that difference. So that's what gap insurance is. A lot of times when you're financing a car or leasing a car, the car dealership is going to require you to, not require, I shouldn't say require. The car dealership is going to recommend it. Well, they would require it, but what I mean by they don't, you can either get it from them or you can get it from an insurance company. That's basically what I'm trying to say. And it's usually more affordable when you get it from an insurance company than from a car dealership, because they want to make sure that they're protected too while you're paying on that car. So I highly recommend gap insurance on a car that's new, that you're financing or leasing, because car depreciate quickly, and you don't want to be in a situation where that car is worth less than what you owe on it. So highly recommend gap insurance, and it's affordable. Gap insurance really doesn't make a big difference in your premium. It's like one of those, it's like rental car reimbursement or roadside. It's like, it's one of those coverage options that's they really don't make a big difference in your policy. So, all right, what type of car insurance shopper are you? In my experience, I come across 3 types of car insurance shoppers. You have the budget minded. Most people are budget minded. I get it. Coverage focused. You'd be surprised. The people who are coverage focused are the people who actually experience, accidents that change your mindset, change your outlook on insurance, period. And then you have both. I always say if it's feasible, let's do both, because you want to make sure that you're getting the best rate possible, but you don't want a policy that's, not going to pay you enough when you actually have to use it. All right. So we're going to talk about, let's see here. All right. So these are the questions that you're going to want to think, consider. Are you getting all the coverage you need? Are you getting all the discounts and savings? What is covered if your car gets damaged? What is covered if someone is injured? And what are your out-of-pocket expenses? Meaning, what's going to be that deductible that you choose? And you want to consider certain things when you're determining your deductible, because one way to save money on car insurance is to adjust your deductible. So the higher the deductible, the lower your premium, and vice versa. But you want to know what each coverage covers before you start saying, you know what, I just want a cheaper price, let me increase my deductible. Then you don't know what's covered, and you actually get into a situation where you have to use that deductible. So optional coverage, and you see I highlighted comprehensive and collision. But these are the optional coverages. You have medical payments coverage. Medical payments coverage is basically like a supplemental coverage to health insurance. So let's say you and your passengers are injured in an accident. That medical payments coverage is going to take care of you and your passengers. It's completely optional in the state of Georgia. If you're someone who's budget, remember we talked about budget minded. If you're someone who's budget minded, one thing you could do to save money is remove medical payments. But you want to make sure that you know what medical payments cover, because like I said, it covers you and your passengers in the event of it covers those medical bills. If you have great health insurance, maybe medical payments won't really benefit you too much. But a lot of times what people use medical payments to do is pay maybe the co-pay or the deductible. They you can use that medical payments coverage to do many things. But again, it's optional. If you're trying to save money, you don't have to get that. We talked about gap insurance. Gap insurance is also optional, but like I said, most times if you're financing or leasing your car, the dealership is going to want to have some type of proof that you have gap insurance on that car while you're paying on it. Roadside assistance. I mean, a lot of times people have AAA. There's no point in paying for roadside assistance if you already have AAA. But if you feel like AAA is giving you the best rate, then stick to AAA. But a lot of times, roadside is really, it's really one of those coverage that it's not significant to have. I mean, it's a cheap coverage to have on your policy. Rental car reimbursement, that's also optional. If you have one car, you want to have rental car reimbursement. If you have multiple vehicles, maybe rental car reimbursement is, may not benefit you. You can save money by removing rental car reimbursement from your policy. Comprehensive and collision. I highlighted those two because it is optional if you paid off your car. If you're financing or leasing your car, they're going to require you to have it. They're going to require you to have comprehensive and collision coverage. It's very important to know the difference between the two when you even if you don't have to have it before removing it, you want to make sure that you know what it covers. So collision coverage, what does it cover? Collision incidents involve other vehicles and stationary objects. So if you collide with another vehicle, you collide with a stationary object like a tree, a pole, that's your collision coverage. If you don't have collision coverage on your policy and you hit another vehicle, you're not going to be covered. You're going to pay out of pocket for that. If your vehicle flip over, that's your collision coverage. If some of us, we drive in areas, even in Atlanta, you can drive some places in Atlanta and, the potholes are serious. And, if your car gets damaged from a pothole, that's your collision coverage. You can file a claim and use your, you pay your collision deductible. So I highlighted collision deductible because, again, earlier I said that, one way to reduce your car insurance expense is to increase your deductible. If you're in the area, if you're in an area where there's a lot of potholes, you're driving the area where you're coming in frequent contact with traffic, you have to consider that when you're determining how high you want your deductible to be. Because if you're driving Atlanta often on I-75 or 285 often, I mean, the chances of you getting into a collision accident, is higher than someone who maybe lives in the country. So if you have a $500 deductible and you say, I want to raise it to $1,000 to save money on my policy, just consider these things before you go raising that deductible. These are the things I talk to my clients about, by the way. So when I'm talking to my clients, I do whatever my clients tell me they want me to do, period. But I'm going to let them know what they're getting, from doing certain things. So, if you want to increase your deductible, I'm going to explain this to you so that you know exactly what the situation is going to be and you're not blindsided. Comprehensive coverage. So some people, they choose collision because obviously collision is when you get involved in a vehicle accident. So some people have collision coverage and they decide not to get comprehensive. If you're someone who you don't want comprehensive coverage, these are the things to consider. Comprehensive is going to cover you if you run into an animal. So even though you're colliding with an animal, it's not collision coverage, people. It's comprehensive. So if you run into Bambi, for example, we live in Georgia. Some certain areas of Georgia have, you come in frequent contact with deers. You want to have comprehensive coverage if you're concerned about running into a deer, in the nighttime. Falling objects. Again, if you live in an area where there's a lot of trees, if a tree falls in your car, you file that on your comprehensive. You file that under your comprehensive coverage. You file a claim under your comprehensive coverage. Natural disasters. So hurricanes, flooding, natural disasters that can damage your car. That's your comprehensive coverage. Theft. If somebody steals your car and you don't have comprehensive coverage, you're gonna be in a tough situation. So if you in the area where there's a lot of people, a lot of foot traffic, or there's been history of theft, something to consider before opting out of comprehensive coverage. And again, highlighting the comprehensive deductible. If you're someone who wants to raise your deductible to save money on your insurance, you want to consider your surroundings, where you're living, before you jump right into increasing your deductible to save money on insurance. All right, so this is the big thing that I'm sure a lot of people have been waiting on: discounts, auto insurance discounts. So I'm highlighting the most significant discounts, the discounts based on my experience working with over a dozen insurance companies. Again, we have a broker platform. So even though you see Liberty Mutual on my shirt, I have access to over a dozen top insurance companies in Georgia, full access. And what I've noticed with these companies is that defensive driver, multi-car, accident-free are gonna be one of the most significant discounts. If you're not familiar with the defensive driver discount, this is an easy way to get a good discount on your car insurance policy. I say it's easy because it's convenient. It's an online course. You take it at your own pace. Literally, I can start the course right now. If I feel like I only got an hour to take the course or 30 minutes to take the course, I can pause it and finish it up another day, or I can spread it out as long as I want. There's no minimum time limit to completing the course. So you can take it at your own time. It's online. You do pay a one-time fee to take the course. It's usually like 25 to 30 bucks, but the discount is so significant that it pays for itself after a month. And what that happens is once you take that defensive driver course, most insurance companies, reputable insurance companies, most insurance companies are going to give you a better rate because you took that defensive driver course. You don't have to have a bad driving record. You don't have to, I mean, it's for everyone to take it, honestly. It's a course for everyone. Even if you have a clean driving record, you've been driving for years, you taking this course is going to benefit you because insurance companies are going to just instantly, well, you're going to need to provide a certificate, which you're going to get anyways for completing the course. But insurance companies are going to give you better quotes, better rates, and you're going to be a happier customer because you took that course. One thing I recommend doing before taking the course, before taking the time and spending the money, is contact your insurance company or broker or agent and see the difference. Get a quote. Ask them. I'm thinking about taking the defensive driver course, or ask me. If you want to trust me and allow me to provide some quotes to you, ask me to do the quote with and without the defensive driver discount, so you can see the difference in savings. Like I say, you can call your insurance company. Most insurance companies, reputable insurance companies, offer this discount. Um, Multi-car. So believe it or not, sometimes when you have multiple vehicles in your policy, it actually ends up being cheaper than when you have one vehicle in your policy. Insurance companies give you a discount for insuring multiple cars with them. So the multi-car discount is one of the discounts that I see make a big difference on the car insurance um, quote. And again, I want to stress that every insurance company is different. So this is based on the insurance companies that I work with. These are the significant discounts. Accident free, obviously. If you haven't had any accidents in your record, um, you're gonna get a better rate. Insurance companies are gonna quote you a better rate. If you have one accident in your record, I highly recommend getting a company with accident forgiveness. Accident forgiveness is not an extra coverage. It's not something that you're gonna pay extra for, or you shouldn't have to pay extra for it. Um, it's just something that insurance companies do as an incentive to attract more customers. Low mileage, good student, alumni. Georgia State, we do get discounts with Liberty Mutual Insurance. So if you're a Georgia State alumni, yes, you get a discount on your policy. Employer affiliation, we're affiliated with a lot of employers. We give discounts to a lot of employers, so you may be able to get a discount based on your employer. Early quote discount. This is another significant discount that a lot of people don't know about. So basically, how early quote discount is, if you're shopping in advance for insurance, let's say you contact me for a quote. Let's say your policy, what's today's date? Today is the 23rd, I believe. So let's say your policy expires on the 30th, but you reach out to me today to get a quote. You don't purchase anything today, but you did the quote today. You started the quote on the 23rd, and you told me my policy is going to end on the 30th. If I gave you a quote that you like and it's ideal to you, and you purchase it within the next few days before the 30th, you're going to get a better quote. You're going to get better rates. Most insurance companies offer this discount. Some people don't know that. So if you are shopping, if your policy is about to renew, don't wait till the last minute to get a quote. Most insurance companies are going to give you an early quote discount. And if you're working with insurance, if you're with the insurance company that doesn't give an early quote discount, I highly recommend you shop around, because this is a discount that a lot of insurance companies I work with offer. Military. When I moved to this country, I realized that people who are in the military get a lot of good discounts or a lot of incentives. So maybe if I knew that, I would have maybe did a little bit of time in the military. But I enjoy what I do. I enjoy the insurance industry. I did this, I've been doing this for some time now. But I'm just joking around to say that I realize that military, pretty much everywhere you go, uh, you pretty much can get a military discount on a lot of things. Homeownership comes with perks. We all know that homeowners get a better rate, typically get better rates on car insurance. Insurance companies give what you call a homeowner discount. So because you're now a homeowner, you're going from renting to owning a home. That's a great time to hit up your insurance company. Plus, you're gonna need to hit up your insurance company anyways, because if you're going from a apartment to a home, you gotta change your address. So, and then you want to make sure they know that you just bought a home and blah blah blah. And you're gonna get a homeowner, what you call a homeowner discount. New car. When you purchase a new car, some insurance companies give you a new car discount. Paid in full. You pay in full, you get a discount. And the list goes. I mean, there's so many other discounts that are available. What I like to do is when I'm working with a client, I ask a lot of questions. Then to see when it comes to discounts, at least I ask a lot of questions to see how I can get them the best rate possible. So that again, you want to work with a licensed agent or broker who can do all the work for you. What I do for my clients is whenever they're shopping for insurance, I do all the work. The initial consultation is very brief, maybe 5-10 minutes, so I can get all the information I need. And then you go about your day to day. I do all the work for you. I could be spending hours trying to find you the best rate because there's so many companies out there. There's so many factors that affect your rates, and there's so many companies that offer different discounts and incentives. So you may have a company that offer better rates to homeowners. You may have a company that offer better rates to younger drivers. You may have a company that, like I said, offers an early quote discount because not every company offers the early quote discount. So there's so many things that can affect your car insurance rate. When you're working with a licensed professional, we know these things, so we're able to get you the best rate possible. So yeah. All right. So home insurance. We talked about car insurance. Now we're going to talk about home insurance. So home insurance, if you don't know what home insurance is going to protect what most people, it's going to protect your biggest asset. To most people, a home is their biggest asset. So when you get ready to buy a home, you're going to need home insurance. Home insurance provides coverage for your home structure and your stuff inside. So you're going to get coverage for your building and the stuff inside, your personal items. Very similar to renter's insurance policy, where when you purchase a renter's policy, your stuff inside are covered. Liability coverage and additional living expense. So when you have, let's say you're someone who, you're a people person, you invite a lot of people over to your home, everybody's having a good time, and someone gets injured on your property, you have liability coverage in your home insurance policy. That's going to basically, if someone tried to sue you, let's say, oh, they say, hey, so and so had a carpet that was torn up, and I tripped over the carpet and broke my arm, and they try to sue you, your home insurance policy is going to cover you if you have liability coverage. And if you're working with an agent, or if you're working with any company, you're going to get liability coverage. A good policy is going to include liability coverage. What's recommended for homeowners is $300,000. That's the most common you come across, a $300,000 liability coverage, which means you're going to be covered up to $300,000 in legal expenses and all that stuff involved in a lawsuit. Additional living expense coverage. So let's say you have a home and God forbid there's a fire. You can't live in your home while it's being rebuilt. Insurance companies have what you call additional living expense. That's going to compensate you for basically temporary, housing. So that you may have to stay in a hotel. If you're someone that likes to cook, you may have to eat out more. Those costs add up. So insurance companies, you can be reimbursed for these types of things. And a lot of people don't know this too. It's all if renters insurance policies also can include additional living expense coverage. If you don't know if it's in your if you don't know if that is included in your policy, obviously you want to reach out to an agent. We can identify these things, help you understand your policy better. And when you experience a covered loss, you are compensated. So home insurance is not going to cover everything. It's going to cover most things. One of the things that's not covered in a home insurance policy is flood. So if there's a flood, let's say a weather-related flood, that's not going to be covered by a home insurance policy. You're going to need a separate policy called flood insurance policy. But yeah, so that's what home insurance is. When to buy home insurance? If you're thinking about buying a home, you want to make sure you better get ready to shop around for home insurance too, or work with an agent who can do that for you. Like I said, we do all the work for you. Home insurance is typically required before you close on a home. A lender is not going to give you the keys to the home if you don't have insurance on that property, especially, because you're taking out a loan. I mean, and that's a high dollar loan. Um, and again, work with the agent to help you get the best rates. And we have a broker platform consisting of several insurance companies. So if you're thinking about buying a home, or you're in the home buying process, we play a very important role in that home buying process. For example, one of the things that lenders are going to look at before you buy a home is your debt to income ratio. A debt to income ratio basically means, if you have a high debt to income ratio, let's say you have a lot of debt or a lot of liabilities, and lenders are going to look at that. So where home insurance plays an important role in your debt to income ratio is, if you're going to need a certain amount, you're going to need a home insurance premium to be at a certain amount before you can close on that home. So that's where we come into play. If, let's say, you need a home insurance premium of $600 a year, before you can close a home, and all you've been doing is getting quotes for $700 a year, it's very important for you to get that 600 number. So that's where we can help you shop around, do different things to help you get the best rates, so that your closing is not delayed when you get ready to buy that dream home or your first, your starter home. Don't overpay for home insurance. Purchase price is not the same thing as rebuilding costs. Now, I don't know if I have anyone on this line that's getting ready to buy a home, but if you are getting ready to buy a home, this is very important. Purchase price is not the same as rebuilding costs. For example, if you buy a house and it's worth $200,000, that purchase price includes land value. So insurance companies, we're not insuring land, we're insuring the building alone. So when I say the best way to not overpay for home insurance, is to basically get coverage for your building alone, and find out, which we're able to help you calculate this, get coverage on your building based on what your building alone is worth, not the land. So if you bought a home for 200,000, but your land is worth 50,000, then obviously you can have sufficient coverage with 150,000 in coverage versus, getting $200,000 policy, a 200,000 coverage, and a $200,000 coverage, and you kind of overpaying for home insurance at that point. Raising deductibles. It's very common that people would raise their deductibles in their home insurance policy, because most home insurance claims aren't like car insurance claims. So a good way to save money on home insurance is raising your deductible if it's feasible. You want to get a deductible that's feasible. But again, the higher deductible is the lower your premium. Discounts, new purchase. Most insurance companies, pretty much every insurance company I work with, there's a new purchase discount. So you're buying a home, you're gonna get what you call a new purchase discount. The early quote discount also applies to home insurance, like it applies to car insurance. Updated roof. When you become a homeowner, it's very important that you keep your property in good condition. Insurance companies look at that. It's very common for insurance companies to send out inspectors when you're buying a home or buying a new home insurance policy. They send out exterior inspectors to make sure that your home is in good condition. So when you have a home that's updated, or let's say what's very common is people, updating their roof, you're going to get a better rate for updated roof. Insurance companies are going to give you a discount, and it's usually a good discount for having a newer roof. Home safety features. The safer your home, the less likely you are to file a claim. The less likely. So insurance companies look at that, and they give you a discount for that. Annual review. Insurance policies, usually they're paid for the whole year up front, especially if you're going through a mortgage. It's usually paid up for the whole year. So that means every year when your policies get ready to renew, it's very important that you review your policy, or work with an agent, so we can help you understand areas to help you save money or new discounts. And this goes to car insurance too. Insurance companies introduce different discounts, throughout the year. So when you first started your policy, maybe there wasn't a discount that's available now. So that's why it's very important to do an annual review or a semi-annual review if you have a car insurance policy that's 6 months, so that you're up to date on all the discounts that the insurance company is offering. You don't want to leave no discount on the table. Home insurance coverage. So replacement cost coverage is highly recommended on home insurance and even renter's insurance. If you're renting, you want to make sure you have replacement cost coverage. Why? That means if you actually have to use your policy, you're not going to be fighting with the insurance company to get the full value of your policy. I actually had a client who had a bad experience with the insurance company. She bought a $3,000 couch and she filed a claim, and the insurance company gave her $900. That's because she had actual cash value coverage. Actual cash value is a big no-no. I never recommend actual cash value. The only time I mean, I've never had a client that even entertained that after I explained to them how it works. But some people, if they're just focused on getting the cheapest policy, I mean, I hate to say it, you pay for what you get. I recommend replacement cost coverage. So if you ever have to use your policy, you don't have to. You get the full value of what your items are worth. Additional coverage may be needed if you're someone who buys a lot of expensive items, like jewelry. Believe it or not, jewelry has special coverage when it comes to renter's insurance and home insurance. So you want to make sure that you understand how much you're going to get for your jewelry. Um, and also, if you're a photographer, I know we're in this day and age. There's a lot of photographers out there. I know camera equipment can be very expensive. If you're a photographer, that's another thing that you want to make sure you know how much you're gonna get for your camera equipment, because sometimes you may receive limited coverage on things, certain items, so like jewelry and camera equipment. Um, Covered worldwide. If your home insurance and renter's insurance too, just because it's in your home, I mean, just because it's outside of your home doesn't mean it's not covered. So, for example, I travel with my laptop for work. If I take my laptop outside my house and I leave it in my car, which I mean, I that's very rare. But if I leave my laptop in my car and someone broke into my car and stole my laptop, I can file it on I can file on my policy, because most the typical home insurance and a renter's insurance policy is going to cover your item inside and outside your home. Items in storage. So when you if you ever had to put your items in storage, you may the storage representative, or whatever you want to call them, they they may ask you if you want insurance on your items in storage. So you want to check with your insurance company before you purchase additional insurance on items in storage, because, for example, Liberty Mutual, we cover 100% of your items in storage. And that's not uncommon. So you want to make sure before you purchase additional coverage, or coverage or purchase insurance on something in storage, see if it's covered on your policy, or have a dedicated broker agent who can help you, or you can pick up the phone and tell you this right off the back when you need it. Life insurance. Alrighty, so life insurance is one of the most misunderstood. It's one of the most overestimated types of life insurance policy. When I say overestimated, the price of life insurance is, I mean, people overestimate the cost of life insurance by a lot. So I did a little life, you see the LIFE to break it down, what life insurance, what how life insurance can benefit you. So the times when people can benefit from a life insurance policy: if you have loans and liabilities, if you have a family that's dependent on your income replacement, funeral expenses. We're all gonna die one day. We're all gonna die, so you can't avoid that. Funeral expenses and education expenses and estate planning. Um, so, do you need life insurance? Again, if any of these apply to you, yes, you need life insurance. So, loans and liability. If you got debt, you got student loans. Let's say you had a relative that co-signed that student loan. Let's say you have a mortgage and you're married, or you're not even married. I mean, some people buy a house together and they're not even married, so both their names are on that mortgage. You want to make sure that both of you look into life insurance, so if one of you die, then at least you know that you're not leaving the other person in a financial burden. Um, Income replacement. So if you're like myself, I had my daughter. She's 6 months old. Um, I already had a life insurance policy before she was born because I knew that I know from my experience in the insurance industry, that the younger you are, the better rates are gonna be. So I wanted to lock in. I wanted to buy a life insurance policy and lock in a really affordable rate before I get older and rates start to get more and more and more. So income replacement. If something happens to me, my daughter is gonna be taken care of regardless of if I'm alive or not. My daughter is gonna be taken care of because I purchased a policy for her through work and outside of work. I'm going to touch on that, having a policy both through work and outside of work. Funeral expenses, like I said, we're all gonna die. So, I want to make sure that if my family has to bury me, they're not left with a burden. Funeral costs are very expensive. I didn't even realize how expensive it was until I started working in the insurance industry. Yeah, funeral expenses are definitely, they can add up. And I can I get passionate about this. I really don't like GoFundMe. I hate to see that. And like I said, I get passionate about it. If y'all have any, when we get to the Q&A, y'all can share y'all thoughts. But I really don't like the idea of GoFundMe because I feel like it's promoting people. It's just you're leaving your family in a situation where they have to ask people to raise money for you, for your burial. When if you were educated, a lot of us are not educated on life insurance, so I get it. But if you were actually educated, if you're actually informed, and you still didn't purchase a life insurance policy, and you left your family in that situation where they had to get a GoFundMe, I get passionate about that. Like I said, my family, they will never have to worry about anything when I die because they're gonna get taken care of regardless. Um, Education expenses and estate planning. I have a daughter. I want to make sure that if I want to make sure that she's not paying for college, life insurance policy is a great way to do that. If I pass away, she can use that payout to also pay for education expenses and estate planning. Estate taxes. This is very popular for homeowners, if they're leaving property to their kids. You have property taxes, so life insurance can be used to pay for property taxes too, and a lot of other things. But that's like a brief that's like a summary. Do you need life insurance? So yeah, again, I touched on that. Even people with no dependents need life insurance. So if you're single, you still need life insurance 9 times out of 10, unless you plan on just getting cremated. I don't know the cost of cremation, but you want to make sure at least you have a small policy. You may not need a big policy like me because you don't have any dependents, but you may need a small policy so that if you have to get buried, like I said, your family is not asking people to raise money to on GoFundMe or contribute to your GoFundMe account. And again, there are certain times when some people just have to use GoFundMe. I get it, but I'm referring to the people who are actually informed about life insurance and still put their family in that situation. I get real passionate about that, so I'm gonna move on. Um, Types of life insurance, most common. You have term life insurance and whole life insurance. These are you have other subcategories, but these are the two most common life insurance policies. So term life insurance is going to be temporary coverage. That's the most affordable type of life insurance. When you think about having temporary life insurance, you're using it for temporary financial obligations. So temporary financial obligations. Perfect example is if you are paying a mortgage, you bought a home and you have a 30-year mortgage, and you have a wife, or you're sharing that, or you co-sign with someone on that loan, and it's for 30 years, then you will benefit from a 30-year term life insurance policy. All right. So that you basically, if something happens to you during that 30-year period, your policy pays out. If something if that 30 when that 30-year period ends, you no longer pay on that policy, you no longer have coverage. And again, if all you're doing is, if all you want your life insurance policy to do is take care of a temporary financial obligation like a mortgage, then you're not going to need a permanent policy. So that brings us to whole life. Whole life is a permanent policy. You hear people talk about, I'm sure I see it all over social media, generational wealth. Whole life insurance is a great way to build generational wealth. A whole life insurance is going to come with additional features like cash value. It's going to accumulate cash value while you're alive. And a lot of people don't know this. Some people may. you can actually use your life insurance policy while you're alive. So if you have a whole life insurance policy that builds cash value, that is your money. You can use that money at your discretion. So the, the benefit to having a cash value life insurance policy is that if you purchase a policy young and you had this policy for several years, that cash value accumulates. And you can use that money to, let's say, put a down payment on a house. You can use that money during financial hardships. You can use that money during times. Basically, you can use the money for anything. I mean, it's your money. You can use it at your discretion. But then again, you want to work with an agent to see how you can go about accessing that money. I mean, it's really, it's easier to get a loan from your life insurance policy than it is from the bank. That's something that I can touch on in more detail for someone who's interested in whole life. But term life and whole life, they benefit you depending on what you're looking to do. So when you're trying to get a quote for life insurance, it's very important that you're being asked questions based on your needs, because term life may not benefit you or whole life may not benefit you. And if you're someone who's price sensitive, like you're trying to get the cheapest, most affordable policy, you're gonna basically be looking at term life, because term life is gonna be the cheapest life insurance out there. How much does life insurance cost? So there's gonna be four main things that's gonna affect your life insurance. I'm highlighting the two most important: age. When you're younger, if you want a life insurance policy, if you really care about your family and you want to make sure that your family are taken care of, but you're just wondering, but you don't want to be paying an arm and a leg for life insurance, I get it. The best way to get locked in at a life insurance rate that's affordable is purchase while you're younger. The younger you are, the better quotes you're gonna get, and you're locked in at that rate. Your rate doesn't change. Most life insurance policies are level. So I'm 27 years old right now. I purchased a policy. Let's say I purchased a policy at 27, an additional policy for my dog at 27. This policy, I can be 60 years old and I'm gonna be paying the same rate that I paid at 27. Health. Depending on your health condition, that can affect your rate. It's not gonna make it impossible for you to get life insurance, but depending on your health situation, that's gonna affect your rate on life insurance. Gender, fellas, we pay higher life insurance rates than women do because women tend to live longer than we do. So unfortunately, we just stuck with the higher rates for life insurance compared to women.
Well, that's certainly a bummer. That's a bummer. And Darren, thanks so much for the fantastic information.
We're running low on time. I didn't realize.
Yeah,
oh, man,
you get real passionate.
I didn't realize, man. I'm just going.
So we do have a few questions.
Sure.
And Chauncey's going to flash your contact information so that people can follow up with you with questions that we're unable to cover.
Okay.
Can you go ahead and flash the screen for the giveaway?
Sure.
As to you all, or Darren rather, is doing a giveaway. He is giving away a Bluetooth speaker and a cooler backpack, I believe.
Yep.
Where are the pictures?
It's going to be an Olympus cooler backpack. Basically, I'm going to be giving away either Olympus cooler backpack or a Addy Bluetooth speaker. Is whatever you prefer. Whatever the winner prefers, I will have either the backpack cooler, which is I actually am a big fan of the backpack cooler. I love this. The big reason is if you like to go outdoors or you travel, or you just it's a nice cooler. You can put anything in there. It has a lot of space. And
encourages you to stay socially distanced, like picnic in the outdoors.
There you go. And then you have the added Bluetooth speaker. Obviously I don't have to explain that. It's a Bluetooth speaker. Pretty cool. Now everyone is automatically going to get one raffle submission because you're attending this event. But I'm also gonna give I'm also gonna give someone or whoever who decides to follow me on social media 2 raffle submissions. That means you have a greater chance to win these one of these items.
And your Instagram handle?
Yes, my Instagram is. Hold on. Oops, I think I just passed. Okay, so yeah, my Instagram is Advisor. I know I talked to a lot of I probably said a lot of information at y'all through a lot of information at y'all today. As y'all can see, I'm passionate about what I do. I'm very knowledgeable at what I do. And I help my clients and get the best rates possible. If you follow me, Agent Advisor, you're gonna see I'm gonna post a lot of informative information on there. You can always reach out to me if you're looking to get a quote for auto, home, or life insurance. I'm also on Facebook. If you want to look me up on Facebook and like my Facebook page, that would be greatly appreciated. But yeah, matter of fact, if you follow me on Instagram and like my Facebook, that's 3 raffle submissions. But like I said, everyone's automatically gonna get 1 raffle submission just for taking the time to listen to me. I think that's fair. And you can get either the Olympus Cooler backpack or the Addy Bluetooth speaker.
Well, we certainly appreciate you, Darren. It's been an amazing presentation. I even learned something new about the early discounts. I think that's what it's called, or new home discounts. So that's new to me, and I was an auto underwriter.
I know. I was like, I know Brandon knows some of this stuff.
So thank you for an amazing presentation. We did get some questions. I'm going to send those to you via email.
Okay.
And of you who did ask questions, you can catch Darren's responses on Instagram and Facebook. He's probably going to do a live or an Instagram story or Instagram post where he's answering these specific questions for you.
Yep. And I also want to make sure that I give whoever attended this meeting a credit. I wasn't able to see the participants, so yeah, whoever attended this meeting, if you follow me on social media, you want to send me a message, say, hey, I attended your event, and I'm just I followed you just so I can make sure you get credit for it. So oh, perfect, thank you, Chauncey. So Chauncey just sent me an email. Like I said, all y'all automatically get 1 submission. But if you follow me on social media, let me know so I give you credit for the having followed me. And yeah.
All right. Again, Darren's information is flashing at the bottom of your screen, along with his email information. That'll also be dropped in the description, or it's scrolling across. You can also follow up with us at alumni.gsu.edu to not only find out how to get in contact with Darren, but also to see other amazing events like this. This is the Best of the Blue series, and we'll be doing other things just like this. And you can check all of that out on alumni.gsu.edu and also on social media at Georgia State Alumni. Thank you all again for attending. I'm Brandon, and have a good night.
All right, y'all.